In the past month, we witnessed a persistent upward trend in the prices of gold and silver. However, today we observe a decline, and the question arises, is this a temporary dip, or will prices continue to drop further? This is the topic of discussion for this video. Approximately a month ago, the price of silver was around $21 per ounce, but it steadily climbed and reached nearly $26 per ounce yesterday. The recent drop in prices is due to the Federal Reserve's anticipated rate hike at the upcoming FOMC meeting, which I will elaborate on shortly. I would like to present the current status of gold prices. Today, there has been a significant drop in gold prices, which were on the verge of hitting an all-time high yesterday, falling only $30 to $40 short. The decline today is around $36, and it is a good opportunity for those waiting to purchase gold or silver. However, it is important to note that premiums on precious metals are still high, which needs to be factored in. A recent article from Kitco News reports a decline in gold prices with a headline reading, "Gold prices slide lower due to stronger than expected U.S. consumer sentiment. University of Michigan Consumer Sentiment Index at 63.5. The article highlights that this situation is adding further selling pressure to gold and reinforcing the expectation of a 25 basis points increase in interest rates by the Federal Reserve. According to the University of Michigan, consumer sentiment for the upcoming month has dropped by 3% from last year, but it is still 27% higher than the all-time low in June. This suggests that the economy is not slipping further into a recession. This data is signaling to the Federal Reserve that they can continue to raise interest rates, which is what they are likely to do. The target rate probabilities for the May 3rd FOMC meeting show an 81.2% chance of a 25 basis point rate hike and an 18.8% chance that rates will not be raised. This is bullish for the dollar, causing gold and silver prices to fall as they have an inverse relationship with the dollar. The markets are pricing in the expectation of another rate hike by the Federal looking ahead. The expectation for the June meeting is that there will be no more rate hikes, and rates may start getting cut in September. This is when we can expect to see gold and silver prices rise. Looking at the DXY, which indicates the strength of the dollar, we can see a significant increase after the release of the data, and it has continued to rise. As of today, the dollar is up, while gold and silver prices are down. This is a reversal of the trend we've seen over the past month, with the dollar down and gold and silver up. However, the question remains whether this trend will continue. In a recent poll on my channel, 58% of the respondents indicated they wanted silver prices to continue to rise, while 42% preferred prices to go down, allowing them to buy precious metals at a lower cost. So where do I think silver prices are headed? Will they continue to drop, level off, or potentially go up? In the next part of this video, I'll share my thoughts on that. Let's take a look at the silver price chart from the last 3 months. We can see that silver hit a low of $20 an ounce on March 8th, and then rose to almost $26 an ounce yesterday. If we overlay the US dollar chart or the DXY, we can see that when silver hit its low, the DXY was at its peak at 105.66. Since then, the DXY has continued to fall, and went down to 101 when silver price peaked. As of today, with silver price dropping, we are seeing the DXY rise. So, it seems that whatever the dollar does, silver will likely move in the opposite direction. With the Fed announcing another rate hike in May, I am anticipating that silver prices will level off or maybe even decrease slightly. However, if the Fed decides to pause and not make any more rate hikes, we may see a rise in precious metals prices. But As the Fed continues to maintain its course of no rate hikes or cuts, we'll probably see precious metals prices remain flat or even decrease. Therefore, I still expect to see lower silver prices this summer, but once rate cuts begin, we could see a significant rise in prices. Of course, the situation can change day by day, and unexpected events can occur. If banks fail or the Fed cuts rates at the next meeting, we may see silver prices spike up tomorrow. But if things continue the way they are, I believe lower prices this summer and a big spike in the fall moving into next year are likely. If you want to buy silver today, there are still some great deals available on SD Bullion's website. They have the 2023 Britannias on sale, with a premium of about $6.50 per coin over spot if you're purchasing 1 to 24 coins. To get a better deal on silver, you could consider purchasing 10-ounce silver bars, which are around $5 per ounce premium. If you buy 2 bars, you'll exceed the $500 minimum. Of course, the more you purchase, the lower premium you'll pay. As we wrap up, I'm interested to know your opinions on the direction of gold and silver prices. Please share your thoughts in the comments below. Thank you for watching, and I'll see you in my next video.